capital and revenue, expenditure and income. This activity is going to look at capital and revenue, expenditure and income and explain it with some concepts. There will be a few tasks for you to complete throughout this video. So we're going to be looking at Bee Gym. Now Bee is looking to open a new gym, and the gym that Bee is going to be looking to open is going to need a bit of help because Bee wants your help to plan the income and expenditure. So you're going to need a pen and some paper so that you can obviously help out Bee to do this. And oh look, Bee's got himself a really trendy logo as well. Task 1 is all about expenditure. I want you to make a list of all of the types of expenditure that you think Bee is going to have when setting up and operating Bee Gym. So literally make a list of all the different types of expenditure. Now remember, expenditure is money going out of the business that Bee's going to have when setting up, so that'll be startup costs and operating costs, so from Bee Gym. Pause the video while you do that and then unpause it to see what answers I've got. Okay, so the first one you've got is buying the building or renting the building, depending on which one you've got there. Buying some equipment like the fitness machines, paying wages, utilities, tax, telephone bill, broadband bill, paying the insurance, paying for fixtures and fittings that go inside the building, paying for the cost of sales. So for example, in the vending machine, so the cost to buy the crisps, for example, the cost to buy the food that's being sold, so that's what a cost of sale is. Or even like if he sells a t-shirt, for example, the cost of buying the t-shirt. Training, so for example, for his staff, to train his staff, and obviously marketing costs. So you can see that Bee has made a nice long list of costs there. You may have others on your list that I've not even thought of. It doesn't matter if you haven't got them, as long as they're a cost, whether they're a startup cost or an operating cost, that's perfectly fine. So what I want to do now is on your list that you've got, or if you want to, you can use my list, it doesn't matter. Right, it's your choice. If you're feeling confident, do it with your list. If you want to make sure you get the answers right, you're not feeling so confident at the moment, use the list below. So which of those examples would be basically revenue expenditure and which would be capital expenditure? Now if you're unsure on this, revenue means it's an ongoing cost. Capital is a one-off cost, so you're going to buy it as a one-off. So go through, pause the video while you do that, and try and find out what are revenue ones and what are capital ones. Make sure you pause the video now. Okay, right then, let's see what answers you've got. So we're going to first start with the revenue ones. So wages is an ongoing cost. Utilities like your gas, your electric and your water, for example, ongoing cost. Tax, got to be paid when you're working, your business is trading, so it's an ongoing cost. Telephone bill, ongoing cost. Broadband bill, ongoing cost. Insurance, ongoing cost. Cost of sales, remember the more items you sell from your vending machines or the more t-shirts you sell, obviously the more you're going to have to pay, so it's an ongoing cost. Training, ongoing cost. And your marketing will be an ongoing cost. So they're all costs that will be ongoing in the business, so that means they're going to be revenue expenditure because it's money going out all the time. Whereas we have capital expenditure of buying the building, for example, of buying the gym equipment, and maybe buying our fixtures and fittings. Now notice they tend to be one-offs as well. So the way we look at capital expenditure is it's one-off items. The one-offs we need to buy, and typically they tend to be expensive. Now that's not always the case, but it's always the idea of being a one-off. So capital expenditure being a one-off, revenue means ongoing. If you got those right, well done. Let's move on. So Bee's going to need your help now when it comes to income. Firstly, make a list of all the different types of income that you think Bee is going to have when setting up and operating Bee Gym. So again, income sources for setting up and income sources when it's operating. Pause the video whilst you do that. So let's take a look at some of the answers that you possibly could have got. So I'm going to start with the capital forms of income. So you could have your mortgage, so that's money from the bank. Got your loan, which maybe is taken out to pay for some of your equipment or maybe to pay for some of the other costs you got in the business. And perhaps you've got your owner's investment that's going in there as well. So B puts some of his own money in. And then, of course, you're going to have your revenue forms of income. So you're going to have like gym membership, casual payments, the vending machines, for example, personal training, merchandise sales, so selling your t-shirts, for example, your car parking, if you're going to charge for car parking, and maybe if you're going to charge some of the classes that you operate. So you can see they're the different types of income that we've got. So B obviously now needs some more help when it comes to looking at these things called intangible assets. Now remember, intangible assets are things we can't touch. So you physically can't touch them. Now B is trying to work out which of his assets are going to be intangible. Help B basically work these out for the list below. So you've got a list of assets that B owns. So they're things that B owns. Which ones are intangible? Pause the video while you do that, and then unpause it to find out the answer. So let's have a look at the answer, shall we? So the first one we've got is a logo. You physically can't touch the logo. It's a drawing. You can't basically take it home with you. So it's intangible asset. Customer loyalty. You can't touch customer loyalty, and that's quite important. The brand name would be another because you can't physically touch it. And the trademark could be another, because remember, if you trademark B Gym, obviously it's got a trademark. Again, it's a little item, but you can't physically touch it. It's an intangible asset. Now, the building, of course, you can touch, so that's not intangible. Gym equipment, the same. Computers are the same. Fixtures and fittings will be the same. Land will be the same. Reception desk will be the same. Your sign will be the same. And your company van will be the same. So you can see there, they're clearly the intangible assets. Now, those intangible assets, of course, are worth lots of money. Because if you're going to buy this business from B, you would obviously want to be buying one that's got a good brand name. It might have a really good logo. It might have a trademark. And the loyalty is something that really is important, because then people are going to keep coming back to your business regardless, because they're loyal to you. So let's have a look at non-current assets. So B's trying to work out now which assets are non-current, and you've got to help B out by doing the same again. Now remember, non-current assets are items you own that typically can't be turned into cash within a year. So they're going to take longer than a year basically to turn to cash. That's what the word non-current means. Current means within a year. So basically longer than a year to turn into cash. So you need to go through it, think about it, and then obviously just mark on which one's going to be non-current. Pause the video or whilst you do that. Okay, let's take a look at the answers. So, the building, for example, is going to take longer than a year to turn into cash. The gym equipment potentially would take longer than a year to turn into cash. The fixtures and fittings would take longer than a year to turn into cash. The land would take longer than a year to turn into cash. And the sign potentially would be very hard to just sell and turn it into cash, because obviously it's a sign for the business. The company van, again, would probably take longer than a year to turn into cash. Even the reception desk would probably take longer than a year to turn into cash. They are quite complex. Computers, they are seen as quite tricky just to sell. You can't just get rid of them straight away, so they'd probably be seen as a non-current asset. Now your logo, your customer loyalty, your brand name, and your trademark, as already established, they're intangible. You can't touch them, so typically we're not going to class them in the same bracket. Okay, hopefully you've done really well out of that. You now understand capital and revenue, expenditure and income, and you've been able to apply it to the example. If you found that really useful, then make sure you give this a like, a share and a follow. And don't forget to click that subscribe button down below. If you're not so sure, make sure you go and check out my other videos. I've got capital, revenue, expenditure and income. And also don't forget to do some of the quizzes that are on the webpage as well that help you. Not going to say now. Until next time, keep buzzing.